Are you planning to buy a co-op in the New York area? Well, here are the 5 most important things you need to know before buying a co-op. Hi, my name is Walter and I've been a real estate agent here in Westchester and Bronx County for the past 17 years. And over that time, I've helped over 100 different families buy and sell co-ops. So I know that there are many benefits to buying a co-op. Number one, they're much more affordable than condos. The average price of a 2-bedroom condo in Westchester County right now is $435,000. And the average price of a 2-bedroom co-op is only $280,000, which means that condos are selling for 36% more than co-ops. There are also a lot more co-ops available for purchase compared to condos. Right now, there are 239 condos for sale in Westchester and Bronx County. And at the same time, there are 769 co-ops available in the same area. And some neighborhoods don't even have condos at all. I'll give you an example. The neighborhood of Morris Park in the Bronx right now has 24 co-ops for sale and has 0 condos. In fact, that neighborhood only has 1 condo building at all that even has condos available. Now, lower prices and having many more options are 2 of the reasons why people buy co-ops. What I've noticed is that there are a lot more things about buying co-ops that buyers just simply don't know when they start their search. So I'm gonna go over the 5 most important things you need to know before buying a co-op. Number 1, we kind of already spoke about, because the reason why co-ops are much more affordable than condos is because they come with a lot more rules and restrictions. Each co-op building has its own specific rules and restrictions that everyone has to follow. So it's important that if you're planning to purchase a co-op, you get to know what that building's specific rules, restrictions, and guidelines are before buying. I'm just gonna go over the general, most common restrictions that I've seen. One of the most common restrictions for owning a co-op is who's allowed to live in the apartment. Many co-ops only allow the owner and their immediate family members to live in the apartment. They don't allow any renters at all. Some co-ops allow you to rent after 2 or 5 years. And even the co-ops that allow you to rent in the future, they may also require the renter to get board approval. So you just can't rent it to anyone. The renters have to be approved by the board before they're allowed to move in. Now, many co-ops have a minimum down payment requirement that can be anywhere between 10% and up to 30%. This means you have to have that down payment in order to purchase the property. Even if your banker can do it with a smaller down payment, the co-op building will require you to put the minimum down payment in order for you to purchase. Now, many co-ops also have an income requirement or a debt to income ratio requirement. This means they set a minimum income. Actually, sometimes they can even set a maximum income. And so you have to make a certain amount of money in order to purchase in that building. Or they could have what's called a debt to income ratio requirement, which means only a percentage of your income can go to pay towards your monthly housing expenses. I'll give you a very simple example. Let's say you're making $10,000 a month and the building that you're planning to buy has a 30% debt to income maximum, which means that only 30% of your monthly income can go towards paying for your housing expenses. So in that example, if you're making $10,000 a month, your housing costs of your mortgage and your maintenance cannot go above $3,000 in order for you to qualify to purchase. Now, a very common question I get is what happens if my income changes after I buy the co-op? And the answer is nothing. They check your income and your ratios and all of that before you purchase. After you purchase it, your income could change and it's not gonna have an effect on what happens to the apartment. All the co-op really cares about is making sure that you're still making your maintenance payments on time. Another restriction a co-op may have is reserve requirements. Your co-op may require you to keep anywhere between 3 months up to 24 months of monthly housing expenses in savings after the closing. So last year, my wife and I started searching for a 2-bedroom co-op. We saved up enough money for the down payment and the closing costs. But as we were searching, we noticed that a lot of the buildings that we wanted to buy in had reserve requirements. So because we didn't have enough money saved for reserves, we decided to hold off on buying a 2-bedroom apartment last year, and we started searching again this year. The second important thing that you need to know before buying a co-op is that you may have to go through the application process twice. If you're getting a mortgage, you have to go through the regular loan application process, and then you're gonna have to go through the co-op application process. These applications can be over 250 pages in length. You're gonna have to provide multiple years tax returns, current bank statements, pay stubs. They're gonna run your credit. It's a really lengthy, long application that you have to be ready to fill out. The third important thing that you need to know before buying a co-op is that you're gonna have to submit a financial profile with your offer. Now, usually when you buy a house, you just submit a pre-approval letter with your offer and terms. But for a co-op, the agent representing the seller is going to want to have a basic financial profile of yourself before accepting the offer. So this could go of one of three ways. The easiest, simplest way for them to do it is for them to call up the bank that you're working with and go over your financial profile with your banker. Another way they can do it is they can have you fill out a questionnaire where you're answering questions about how much money you make, how much money you have in savings, and what your credit score are, and how much debt you have. And then the third way, which some real estate agents do, is they ask you for a proof of your paperwork. So they may ask to see current pay stubs, or they may ask to see how much money you currently have in savings. They may actually want to see the bank statements. And the fourth thing you need to know is how long it's going to take. Buying a co-op typically takes 3.5 to 4.5 months in time. So let me break that down for you. It could take up to 45 days to get a commitment letter from your bank. Now that's important because you can't start the co-op application process until you have a commitment letter from your bank. So you're already 45 days into the process. Then you could submit your application. The management company can take up to 2 weeks to review your application before it then gets sent over to the co-op board so they can schedule you for an interview. And that could take another 30 days. So when you add up 45 days plus 15 days plus another 30 days, you're in the process 90 days before you get an approval. And it can take another 2 to 3 weeks to schedule a closing after you've been approved. And the final thing you need to know before buying a co-op is you need to do your due diligence. That means you need to read through the housing rules, the bylaws, and the application so you know exactly what information is going to be needed before you start the whole process. And since you're investing your money into this co-op, it's important to make sure that the co-op is doing well financially. Co-ops issue financial reports every year, and they usually come out the summer that the year ended. So I'll give you an example. Right now, we are in January 2025, which means 2024 just ended, and the 2024 financial report will probably come out sometime in the summer of this year, summer of 2025. So now, for most of us, we've never read financial reports before, so we may not even know what to look for in a financial report. So I'm gonna give you a few tips on what to look for to make sure that the co-op is in good financial standings. Tip number one, a sign that the co-op is not doing well financially is that their maintenance is increased higher than the average maintenance for that area. I'll give you an example. In my neighborhood, a one-bedroom co-op, the maintenance could range anywhere between $750 and $900. So if I see a co-op where the maintenance is $1,100 or more for the same size apartment, that's usually a sign that the people in that co-op haven't been paying their maintenance on time, and the co-op was forced to increase everyone's maintenance. Another thing to look out for is if banks are not lending in a specific co-op. You see, banks look over the financials for a co-op, and if they think that the financials are doing poorly, they will refuse to lend. So if you can't find a bank that will lend on a specific co-op, there may be a reason for that. And a third tip to find out how well a co-op's financials are doing is simply to ask your real estate attorney, because they have much more experience reading and reviewing and analyzing financials for a co-op than we do. And that's pretty much it. Those are the 5 most important things you need to know before buying a co-op. Again, my name is Walter. I work here in Westchester and Bronx County, New York. And if you have any questions about buying or selling a co-op, feel free to reach out to me. Thanks so much. Have a great day.